Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by the lab today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and you always have an invitation to visit the Trader Lab. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profile in the intraday developing time frame. It is about integrating order flow so you understand how the market works, why it does what it does, and how you might get in alignment with it. So what we're going to look at is order flow, market mechanics, auction market theory, and using a volume profile as a chassis to overlay trades on. In addition, if you visit the Trader Lab, and there's a link in the bottom of YouTube, there's no cost for that. There are 60 PDFs of the structured trades you'll see me discussing here every day in the stream. Also a library of webinars on the process, and the Trader Lab's a community of like-minded traders who've come together to leverage their collective experience. If you have been in this business for any time, you understand it's an isolated business, and the idea of a community is to leverage the collective experience of the participants. And what you'll find is that the Trader Lab is a no-nonsense community with the idea of building out the business side of trading. In other words, understanding what is this business, how does it work, and can you create a plan to operate in a trading business? So let's take a look at what's going on. Also, I want you guys to know that I did a special webinar yesterday, a stream, which I'm going to make public. It's available to all of you, and I'm going to post a link in YouTube in case you missed yesterday. And it was basically, can the market predict the outcome of the presidential election? And if you watch yesterday's stream, you will see that it actually did. Interesting, isn't it? And this is what market mechanics and understanding the market and getting an education on the market is all about. So it's not about predicting anything or politics. It's about understanding the market. If you're interested in understanding the market, then maybe the Trader Lab is someplace you ought to visit. General disclosure. Let me get this back here. Sorry about that. High tech. General disclosure. All Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room, and this is for educational purposes only. And if you want to avail yourself of yesterday's stream, there is the link in YouTube if you missed that. Also, remember, if you're in the Bookmap Discord Trader Lab community, all the exclusive streams are available to you, including this one, but the library of webinars is specifically available, and as well as the 60 PDFs of structured trades, so you guys can take a look at it. Now, I'm going to show you guys yesterday, because we got to kind of start off with yesterday. But this is what these structured trades look like. I'm just saying. Then you can download these, and there's order flow, and there's a lot of these trades I'm discussing here are available. NQ, ES, live trades, screenshots, and development tools that I worked on with Bookmap developers a number of years ago, back in 1920, sure. 2021, 2020, and all of that. So these are examples of things you can download. And the idea of these, I'm not a vendor. It's to help you reverse engineer trades that might have a statistical edge. Now, the job of traders in the Trader Lab is to adjust these processes to their psychological alignment. Some traders are going to trade short-term rotations. Other traders are going to, go pedal to the metal and go more long-term rotation. Now let's look at yesterday. I'm coming back because I want to show you a higher time frame. And the thing to understand about trading, it operates in fractals, and I don't use time, but let's use it anyway, time frame. Time doesn't regulate the market, only in maybe the RTH or the full daily. Otherwise, intraday, it's not regulated in that sense. It is rotational. So the rotations are something that we will determine. We're going to get inside of rotations, but we have to look at a top-down And then I think of it as a bottom-up approach, so top-down being higher time frame. So what's the higher time frame? The high time frame is out here. This includes all the volume since we've been here forever, okay? In fact, this chart, the volume goes back to, I think, 2003 or something, and doesn't have to. But this over here is a volume profile. And what it's showing here in the low volume areas is what's called a low volume node. And then as you go out in time frame, higher, this is low volume, high volume is over here. And then you go down below, there's low volume. So let's take that idea and take it a little further. This is a consolidation. October 9th, we broke out of it. So what is a consolidation? Swing low, swing high, sweet cherry? I'm not going to sing for you. And the low was 57.24. Now let's see why this is important, you ask. October 9th, we broke out, trend day. That sets up a swing low to a swing high. Now here's what I want you to focus on. On the bottom of this consolidation, and by the way, the market goes up to go down. Don't forget that. Take a note. Market goes up to go down, and the market goes down to go up. The market goes up, squeeze the shorts, to go down, take out the longs. The stops are under this low right here. Then go down, take out the low of this day, get shorts trapped, and then what does it do? It goes up. Then we get sellers, goes down, does not take this low out, and squeezes. So what does it do? Takes out this high, and where does it go here? Goes up. What is this over here? That's resistance. What is down here? The fair price. What is the test here? The former fair price. Now, I know if you don't understand the auction, you're going, what is he talking about? And this is resistance. Notice it's the high. Here we open, we test down, nobody knows, and then we squeeze out and take all the stops out above these highs, okay? So we have a low at 24, and we break out. Now this becomes support. So now what do? We break out and we start the march. Higher, get sellers here, take out the stops under here, come under here, make a higher low. Who knows, by the way, and take out the shorts from here. High of the swing. Then what do? The market goes up to go down. Where's the stops? Here. That's called fuel. If I come up here and I close on the low, and then I open and I squeeze out the shorts right here, and it's an inside day, what's the possibility? Take out the longs, eventually take out the longs. And 60 was a big number, if you guys remember. We were banging on 60 for a while. Come down. Now let's look a little further. 58.01. Where'd we come back? Well, we came back in here. Did we take out the swing low? No, we didn't. We tested it, and then the buyers came for it. And then we had an inside day higher. Where do we come? Back here to resistance, 5,900. Don't forget 5,900. Then what do? Now, this is trading. It's like, what's going on? This is too high in the microstructure. And all of this you can learn. Now, you're looking at this and you're going, how does he know what's going to happen? How about this? I don't know. What I know is what might happen. And then I anticipate behavior at locations. This is the auction. So where are the stops? They're under here and there. So what happens here? I don't take these out. And if you guys remember following the stream, it was like, really? How come we didn't take this out? And then here, it looks like we're going to come up here. What do? We come up here, too high, close on the low, and then the gap. And this was our support right here. We take it out. Now, this is last week. Now, if you're following the stream, what did we have? We came up here. We didn't take out this high. We come down. Now, I'm going to take you into the fractal. This high, day before yesterday, was too high. And if you review yesterday's stream, and the stream is posted there in YouTube and the Trader Lab library, and this was our target to take this out, 33. The low of this day was this level, 33. Hit it on the button. By the way, no way to know. So what do? We hit this 33 key level, gap higher, get sellers in the morning, and then squeeze these guys out. But we don't take out these highs. What happens the next day? Go down, take out the 33, which was our target, but what happened over here? What's the low of this consolidation? 24. What's the low of this consolidation? 24.25. Surprise. Now we have trend day down, wick here, wick there, close in the middle. This is called balance. This is an outside edge. If we come through here, then it's game on. And this was yesterday's target. All of this is in yesterday's stream. And the reason I posted yesterday's stream, and I'm sharing it out here in the ether with all of you, because typically these are exclusive for Trader Lab participants, is for you to understand the market mechanics, how the market works. And yesterday, I made the audacious statement, and it's not a recommendation, it was not a prediction, and it wasn't to upset anybody, because politics has nothing to do with this. What this has to do with is market mechanics. What does it say? If you learn how the market works and the message of the market, you might get some insight that most mortals don't have. And again, it's always random. Based on the behavior yesterday, I suggested that the Republicans in the U.S. election would win the election. And I understand and apologized profusely during the stream yesterday if this offended everybody, because everybody vote counts. But the market was already suggesting, and here's the result of that election when it was public. Now there's another piece. Where is support, you ask? Well, if this was our target yesterday, and by the way, that's the high of the day, and you're going to say, really? I'm going to say, yeah. And I'm also going to say, who knows? Then what's next? If we gap up here, where's our support? Here, 5,900. Now, that doesn't mean we won't take it out later, but it also sets up, in a gap scenario like this, two possibilities. Now, I'm going to get into real time. Something called responsive selling. In other words, if you're long and you get this kind of gap and it's up here and you take out the all-time high, might you take a few dollars off the table? I'm asking, and I don't know. So what happens is, in the Trader Lab, then we have what's called structured trades, and that's what I'm going to get into. And the first structured trade was down here to go long because of statistics, which I always refer to. And then we got our sellers, which is our profit takers. And we came down here. Now, the market is bullish. Is it going to take out this high? No clue. Are we going to get more profit taking here? No clue. If we take out this low, it potentially sets us up to come back in here. Maybe not today, or maybe not ever. Or we don't take this low out. We rotate, and after the profit taking, we get new buyers and take out the high, and I have high liquidity sitting around 59.70. So those are all possibilities. None of these are recommendations. I am, as I always like to claim, clueless but not ignorant. So, RTH open. By the way, if you have questions, please post them in YouTube or the Trader Lab, and I will come up for air. And I hope you're getting some from this. Welcome to the Trader Lab. Welcome to YouTube, and please give a thumb up and a like if you're learning, because the whole point of this stream is education and to help you understand that this is a business. And if you approach it like a business, you're going to be developing a plan, which is what we do in the Trader Lab, and then only engaging in the market with the other participants when you have a statistical edge. Your job is not to play a video game or to gamble. I mean, that's up to you. But in the Trader Lab, it's about business, sustainability, and creating a career path. If that's your interest, that's Trader Lab. If it's not your interest and you're in for the dopamine or the gambling and the fun and whatever else you get from this, then that's okay too. But then Trader Lab's not for you, because Trader Lab requires you actually create a career, and it requires work. And we all want the shortcut to the dough, right? Give me. But there's no free lunch in life. Haven't you all know that? What is free? Nothing. Don't we have to earn it one way or the other? And I can suggest too, you don't earn it by buying a little course. Not what it is. There's no magic indicator or anything. Nothing. That you can just plug and play like a video game. Ask anybody who has any longevity in this business. Okay, RTH Open. This is called VPAC migration, and I did a special webinar on VPAC migration. I made this up because I made all this up. Not all of it, but I made a lot of this up based on my research and seeing things that others did not see. And I started asking some gurus out there who knew more than me about these phenomena. And they pushed back and told me, and I got really a lot of pushback from those who knew more than me. Okay, so I had to kind of find my way and do the research and prove to myself what might have an edge and what didn't. And I will tell you, there are years and years of research behind what I share here in this stream. And most of the things I researched got tossed because we confuse randomness with edge. We think that just because we see a pattern or something show up that it actually has a statistical edge. Well, the patterns do show up, and they do create winning trades, and they also lose over a large sample size. The casinos don't play their games that way. They don't make them up, and they don't go say, hey, this looks pretty good. Let's see what happens. We all have winning trades. So VPAC migration, RTH Open right here. Overnight VPAC, this has a high probability statistic, opening higher out of range, and you got to vet these for yourself. It's almost an 80% probability. There's also a 97%-ish probability we take out either the first hour's high or low. This turns out it'll be the first hour high. Who knows? Nobody knows at the time, by the way. And then we have the overnight high with a 76% probability, wherever it went, where is it? There, of being taken out. We have the all-time high here previously, so the breakout of this all-time high. Okay, so this is our structure. This is our ballpark. We have about a 97% probability of taking out the first hour's high or low, right? What is the trend? Up or down? Up. As Dirty Harry has said, do you feel lucky? Well, what is your plan? How about this? If you don't have a plan, you wait for your trades. And yes, you are going to take stops, and the casinos do pay the gamblers. The job you have, if you want to actually be in business, is not to play a video game and not make it up, not respond to FOMO, all the weaknesses we all have, by the way. It's all part of the problem. The Trader Lab is here to help you understand the business, build a plan, and work on the problem. The problem is the fight and flight stimulus. And the thing about, gee, I just took a stop, I want to make it back, which is a lunatic in your head called Hyde, Jekyll and Hyde. So going up, going to the moon, Alice. Right here, it changes, right here. And this is called VPAC migration. So what I do is I'm looking at the VPAC, and what the VPAC is just high volume. I don't use indicators, I use auction. So I read a language, and all I do is translate. Your indicators are translators. I'm doing the same thing, except I'm the indicator because I'm responding here. I'm not responding with some lagging price-based something or other that may or may not be in alignment and has no concept of context, which is a gap, a huge squeeze, the market long, and then the possibility is profit taking. And then the thing we don't know, part of the joy of this whole thing is where, when, how. Don't know. So let's label this variable high volume node. Now, what does it say? Let's talk language, guys. I speak market. You can learn to speak too, but it's a foreign language. If you've ever tried to learn foreign language, you know what it takes. How about playing a musical instrument? Have you done that? What does it take? How about to learn to program and write code? What does it take? See what I mean? That's what this takes. If you're not willing to invest that, then this is not for you. Because that's what it takes. Just giving you straight oil from the can. There is no magic, secret sauce, no holy grail. And if there is, come to Trader Lab, share. But I will suggest to you, doesn't exist. So, variable high volume node. Let's go watch the market together here as it unfolds. So, where's the first possibility, you ask? Well, for me, the previous all-time high, in other words, the breakout and the retracement to the consolidation. So for me, I have no short. Why? Trend is up. Context is up. So I don't take shorts. Somebody else can take a short, and it can be quite nice. Why? Because you're basically fading and you're counting on responsive sellers. So I'm looking at this for a gap, if you will, and it's a gap of that consolidation, and I'm looking for longs. So let's watch. Too high. This is moving lower, is saying all this is too high. Now, again, I'm looking for responders, responsive selling to get long. My first area to look is going to be in here. Let's watch. Here's the all-time high. Now, right here, now I'm going to take you into something called microstructure. And this is just a way to slice and dice the market. Now, for me, it is location dependent. This is my first location. So right here, I'm looking, and this is now order flow. Let's get into the order flow. So I'm taking you down now into something called fractals. So all of this to me is going down, going down. And again, I'm only on the long side at this point. I don't care about the shorts. I mean, I'm just telling you my plan because I like to trade the larger rotations, the broad stroke. Other traders are going to be getting short here. This is Trader Lab shorts also. If you want to trade this, short here, short here, short here is all Trader Lab shorts. I don't take them because I'm taking the longs. Trader Lab traders could be taking a short here, here. Here you wouldn't necessarily take it. Here you would. Here you would. Here you would. Right there, you would. You would. If you're a counter trend trader, as you define the trend. I hope that makes sense to you. So this is all potential shorts or you're seeing this and it's saying don't get long. Don't get long. Shorts say don't get long. Shorts say don't get long. Shorts say don't get long. Where's the long? Let's look here. This is where my first long is. Where is it? Going to zero. Don't get long. What's this? Microstructure. Don't get long. First place to get long, right here. So if I was on shorts, which I wasn't on, but other traders could be in Trader Lab, it's subject to their plan, this is where you're going. That's a pretty nice trade. Again, it's not my trade because I trade broader locations. So I'm just sitting here waiting for my trade, And you might say, why didn't you take that? Not my trade. I don't take it. Here's a change in behavior. Now, here's my location. Here's my microstructure. Break high. So now I know here I got a long. Now, do I have an entry? You ask? VPAC migration. So here's my volume. VPAC migration. This says going lower. VPAC here, migration, going lower. Watch. This is the volume. It's right there. This says going lower. Keep an eye on this. Let's follow the yellow brick road. So I'm now in my area looking for a long, And my statistics suggest coming out the top. Also, it suggests taking out, getting to the overnight volume point of control. Remember, 79% probability, and you have to vet all those statistics for yourself, but they are available to you in TraderLab. So this is my volume. This is going down. I still don't have a long, and I'm going, come on. You know, ever talk to the market? Come on. Here's my break high. So now I have my variable high volume node here. Watch. And I'm over this. So I'm going, all right. So I've been looking for my long since here. This was a problem right here. If I got long here, I just want you to know, if I got long here, because it's my location, I would have to get out of this trade. So if I did, I'd take a stop, and I'm perfectly okay with that. Not ecstatic, but okay, because I have to be. So I break high. Now I have my VPAC over here. Let's watch. Right here, variable high volume node. Let's just watch. A lot of volatility. Just watch it. Variable high volume node. Keep an eye on this. VPAC migration. What does it say? Let's talk language again. This is too high. Going down. Going down. Boom. Break high. Back to the VWAP. We have several trades in the TraderLab. This could be right here. Variable high volume node. This is not a trade I would take because I want to be long. Remember that. And I tested this. So this right here, some traders might take a short here. It's not for me. I want to get long. But this ran away from me. How do I get long? It looks like I missed the whole thing, doesn't it? Let's watch. What's this? That's my entry for my long. I narrated this in TraderLab. So this is a long. And then I'm looking for it to come out the top. That's the trade. Who knows, right? And I get taken out. Okay. So let me explain this. The long is here. And so I get risk neutral, and I'm looking for it to come out the top. So this is the long structured trade. And the reason I'm going for the longs at this point is because of that statistic and the overnight high, because I don't know where the high and low of anything is. So that trade, you know, I get a scale, and then I got taken out of it right here when it comes back. So now I break here, and I'm going, oh, that's very interesting. I took out my support. Old saying in trading, support becomes resistance. So I flip around here, and now I'm going down, and I'm going, well, where's my next level? Let's look where it is. MCLVN. Where'd that come from? You're asking. Let's come back to the higher time frame. MCLVN. So this, let's think about this from just a basic point of view. Resistance, resistance, you know, all this happened. Well, if I gap above it, what becomes support? This becomes support, and this becomes support. And I come down into here. Now, I don't know anything, and I still don't know anything. Is this going to hold it, or is it going to come down here? It can do any of those things. So I can't, you know, so I don't have any idea about that because I'm not in the prediction business. I'm in the maybe business. You know, maybe it'll do this, maybe it'll do that. So I come down, and so all I do, once this fails, this is a short, and then I'm coming down to another level. And remember, here it could be here, because this was important, or here. So what I do, and I never get all of it, I'm now going to use microstructures to trail. I'm just going to give you a little peek at what this stuff looks like. So as we have fractals and we break, that's too high. I come down here. Here's a fractal. I break, it's too high. And what is a fractal? It's this. This is a consolidation in a short time frame. So it's not time, it's behavioral. So again, there's no time in what I do. It's just the behavior. Break low. This now outside edge right there is called a low volume node. Here, I'll just draw it for you so you can kind of see what it is. In case you're not familiar with this. So basically what it is the sellers are here, and you can see this is absorption right there. And Bookmap is really great, gives you tools. So I know right here, even though there's a green bubble or delta, that the icebergs were absorbing that buyer, and I break low. Now here, I get buy icebergs, sell stops, and I get the buyers here. They were absorbed. What happens up here? The buyers are here. Why don't we go up here when you see a green bubble? Because these sellers and these sellers are selling up here, passive. And where's the buyers? They were down here. What happens when I break under them? Sellers are here. Buyers absorbed. What does that create? The rotation. Now, where's my resistance? It is there because the buyers failed here and the sellers are under the buyers and this. So if I'm getting short here, not saying anybody should, I'm just saying if you had a structured trade here, you would use this either as an entry with a stop over here or trade management or none of the above. Okay? Let's go a little further. Follow the yellow brick road. This is the auction. That's too high. The sellers are now here. This guy was absorbed. The buyers are there, passive. You see the sellers, you see the sellers. Why isn't it going down? Because the buyers are here. The sellers are there. What happens here? We go up. Where were the sellers? Here, here, here. What's up here? Sellers. Why are they selling? They like selling it here. Let's sell some more. Sellers in control. High volume is here. Going down. Now what? Pull back. What am I pulling back to? Outside edge of a distribution. So when you get this and it leaves the structure and you get the acceleration, the market can come back, and that's called a low volume node, and check it. If this, so this is the distribution. This here, this, that's what it looks like in volume world. And you'll notice if we break out, here's what the language is saying. If we break out of a distribution, think of this like a store shopping, and this is too high, that high volume. In other words, they're chopping and shopping, and the participants leave the store because there's not enough buyers here, let's say, willing to pay this price. And then the sellers take over. We're not paying that, they leave the store. Then they come back and check the price. Price check in aisle 3. If it's too high and they're not going to pay it, they leave the store. Then we start a new consolidation. It's sequential. So depending on how you do your thing, this is a trade management process right here. This is how you can manage your trade in a random environment. Let's just look at it. Now remember, outside edge is here. And there's no way to know. I mean, this is your resistance right here. So let's just see what it does. I don't know. Come down here. What do we know? Too high. Break low. What's this? Look at the high volume. Too high. Break low. Just follow the yellow brick road. Now, nobody knows. Now, my job as a trader is not to predict because I can't. I can maybe, I have a sense of levels because I use the auction and I know what happened here before. Why didn't it stop here? I don't know. Why did it stop here? I don't know either. What do I know? These are important. That's all I know. What else do I know? As we're moving down, we're rejecting levels. So as long as I'm heading south, I'm good. And to where? This part, clueless. Has anybody ever told you they don't know? because they better be honest with you if you're going to be listening to them. Nobody knows. You don't either. Yet we think trading is about knowing and predicting. Unfortunately, that isn't part of it. The casinos, who are very successful, don't know either. How can an industry, the casino or gaming industry, not know the outcome of the next hand? Yet we think we can know the outcome of anything. I'm going to suggest maybe not so much. So where's our resistance? It's here, because the sellers were in control here. Here, my sellers are in control here. I get a stop sweep here, and 333 stops coming out. Your breakfast is on the table, literally. And what happens here? Buyers. So this is my last area where the sellers were in control here. And as far as I know, it's going to zero. Remember, we don't know. Break here to where? Resistance. Right here is the last hurrah. Pull back. It's got to get under here. What does it do? Opposite. Trade's over. Okay. Let's watch. Now what? If this right here is the last hurrah, here and here, and I break high, then what might this become? If this is too low, and now this is too low, and I break high, where's my support? It's there and there. And again, no way to know. So for me, because of this, this becomes a long. And what I'm looking for, again, is to come across and come out the top, which, who knows? Let's look. And this trade goes from here to there. That's called mean reversion. Now, this is not, quote, easy because of the range. And I posted this morning in the Trader Lab that to be very cautious because we could see outsized volatility and you got to adjust your risk to wide ranges and volatility. And that was before the RTH opened, this is kind of what I do in Trader Lab. And I don't call trades because why take my stop? I take them just like everybody else. That's trading. Casinos pay the gamblers. What makes you think they won't? So I'm going to, for this, because I have, what was that statistic you wrote down? The overnight volume point of control, which is just above the IB high, 79% probability. So for me, I am working the longs. So long to here, and then trying to come out the top, the high of the day, current high of the day, which I guess we haven't done yet. And that's for this, because they have that high probability. And then the ETH high. All of these have high probabilities. ETH high, if you remember, is about a 76% probability. Hi, Louie with the one lot. How are you? Dan, my VWAP and mid do restart at 8:30. I mean, these are accurate, I believe. That's the mid. It seems like they're a little out of whack here. Oh, okay. Since daylight savings time, things have just been off a little bit. So I've got to check a few things here, make sure everything is operating, but they're pretty close. So I'm looking for it to come out the top. It doesn't do that. So my runners get taken out. All right. But I still scaled and, because this is the main target, and then this is the statistical targets. I'm still shooting for this. So for me, I'm only on longs. And when I say I'm only on longs, I'm only talking about structured trades. I do other trades. I trade elsewhere. I do other stuff. But for developing traders, you don't need more than structured trades, because if you want to learn the business, you got to understand how the market works. That's what the structure is about. So come out here. So once this happens here, we come down. Actually, I think I took a trade. Where was it? Got to remember now. I don't remember where it was. VWAP to VPAC. Can't remember. I don't remember what time it was. I'd have to go back and look, and I can't. Let me just see if I can get caught up. Yeah, okay. Um, came up here. You know, guys, we talked about VWAP to VPAC in Trader Lab. Guys, what time was that? Do you remember? Was it? It had to be over here, I think. I can't remember now. In Trader Lab, do you guys know what time that was that we took this VWAP to V? At least I did. I don't see it, so I don't know. Yeah, I don't know where it is. So you notice this is the Trader Lab. Um, there's a lot of activity in here, a lot of charts being posted, combinations. Here's Joe. He's talking about a structure he's been studying in different scenarios, all kinds of stuff. This is the Trader Lab. If you don't have this kind of community and the collective leverage to do research and share, think about it. You're missing out. And there is no cost to become part of Trader Lab. Anyway, you guys know what time that was? 8:20, so that's 10:20. I don't think it was 10:20. Okay, well, then let's not worry about it. I just know I took a trade somewhere along here and took a stop. It was a lot of fun. I think it was maybe here. I can't remember. And then we came outside. So what's happening here is because of the range and the volatility, we are not respecting a lot of these auction levels. In fact, I think it was out here that I took a stop here. I think it might have been here, but I don't remember. And then down again. And in theory, I'm pretty sure it was here because I was looking for it to come out here, test the all-time high again, come out to this outside edge. This is called the distribution, which would take you out here and then get long to come back here. And that trade I took a stop on. So that was, I was ecstatic when that happened. That's just trading, It's like, all right. So, and I'm still looking for it to take out the high. I mean, this is my plan, right? For it to come out here. And you can see that's the plan. But you got to have trades to get on the trade. All right, so I don't have anything here in the structured trade package, if you will, to get on this. But this is the goal. This was the plan for the day. Now, if you don't have a trade, and I know this is very hard for us to do because of FOMO and all that kind of stuff, but if you don't have a trade, your job's not to trade. Now, remember, we have this is a target. We have another trade that happens after this called the IB continuation trade, if it happens. We also have this as a statistic. So there is a possibility of a long somewhere to there. And then after that, you're kind of, as they say, on your own because there is nothing up here. So that's the next trades. For me, there are, well, let me just say, structured trades, there were no, there were shorts, but let's just say for the stream, I'm not discussing them because they're counter trend. And you could tell, since we're back at the high of the day, all the shorts from this morning were counter trend. So what I try to do is set what we call a good example. And that is only talk about being aligned with the context. And the context is in multiple time frames. So the shorts this morning were counter trend. And there's nothing wrong with them if you have an edge in it. Or your job is just to take aligned trades with the trend. So this long was good back to here. We came out here, I think. I don't remember if this was a long back to here, going for the high of the day. Yeah, it was. And then there was another long somewhere. I don't remember. But there was a stop in here also. So that's the trade. So there don't have to be a lot of trades. What you need, I believe, and this is just my a personal approach. The thing about trading is we all take stops. So are we taking a 3-point stop or whatever it is, 4-point stop to make 3 or 4 points? Are we going to take a 3 or 4-point stop to make 20 points? That's kind of the way I look at it. So if I'm trading towards this and this, then I'm willing, not thrilled, but willing to take a stop to get on something that has range, because that's really where the opportunity comes, not in chop, 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 because you get in chop, you're going to take a lot of stops, and overall, you're going to potentially overtrade. Your broker's going to come to your house and hug you and send you a gift basket, and you're not necessarily going to come out. But you are feeding the dopamine and action, and that's all dopamine fix. You need to also learn about the psychology of trading and the chemical aspect of trading. You know, what's going on in your brain? What about the hormones? What about the cortisol? What about the fight and flight stimulus? What about all that? Do you understand it? You feel it, but you don't probably understand it because you got to take a deep dive in these things. Buyers, buyers, buyers. Watch. Counter rotation. Where did we come? Variable high volume node, right? To resistance. So we have resistance, statistics, which are positive, and now rotation. This is a very different day than yesterday. You know, yesterday was kind of a one of those days that you are in this business for because it created just one side to trade, which was longs, and traders in Trader Labs, some of them had the best day they ever had in their careers. They're developing careers because we're all developing traders. Now, today's a different animal. It's rotational trading, high range, high volatility, and it's not respecting levels the same way like it did yesterday. So it's very easy to get caught. So then you got to be looking at order flow and be very patient and try to determine what's going on. What's going on? High volume is there. Volume is here. Just going to mark a couple of these so we have some levels marked out. This can go. So we have, I'm just getting current with these levels. And this right here actually is support. Let me mark it. So let's see how this works. Break high, chop, chop, buyers here, break high, trigger, volume is right in there. Support, break high, support, too high, too high, too high, you know, watch, too high, break high, too high, microstructure there, retail here, and then the developing, now I'm in fractals, this is the retail price, where's my outside edge? It's out here. So I have support here, support in here, and they can do this with the idea of coming out the top. So as long as the structure's intact, for me, and it's not a recommendation, it's about getting along. Now, it never has to come out the top. You know, I could do whatever, because this is trading. But as long as the structure stays intact, I'm looking outside for what's called mean reversion trading. When you have rotational trade like this, it is an outside-in trade. This is not really where you want to execute. You want to look outside because there's going to be stops here. This is the mean, and that's why it comes back. Now, we can hold this and go up, or we can come out and get these stops out under here, and then we have levels here and preferably out here to get long to come back here. So if you got long, you're sitting long, you're managing your trade, your stops are far away from this. You don't want your stop here because there's going to be Think about this. Think like a retail trader. Don't act like one. So the stops are here. I'm not going to put my stop there. I got to be further away. And this is where the sellers were. Break, took them out. So this is now resistance becomes support. So for me, my stop is not here, not a recommendation. It's going to be out here. And I can get nailed like anybody else. Now, here's another trade. If I come out here, this area, and the VWAP is here, and the mid is, well, ain't the wrong. This is the VWAP, and that's the mid. Okay, that's accurate. These levels are off, and I have to fix that. Hopefully, it'll be fixed soon. So these are not exactly right. This is right. So, and it's at the all-time high again, the breakout. If we come back here, we have a structured trade called the VWAP to VPAC, and it would be in alignment. So we could come on to the mid or the VWAP, and there would be a mean reversion trade back here. So that's one structured trade. The other, and this is targeting. So if you got long, because we're rotational, you'd be coming out somewhere out in here to here, out the top. That's the trade, not a recommendation. You guys can watch it. No different than yesterday when I suggested where the market might go, which turned out to be the high of the day. And there's no, the thing about trading is that nobody knows. So I don't, if I have a target up above, whether it's this, which, or in the overnight high, which I have, nothing says we're ever going to go here. So I just aim for things because I am using statistics. The same way the casinos operate, when they play blackjack, they have a statistic. They don't know what's going to happen relative to that statistic on any hand or any trade for us. But as long as I have a statistic, I'm going to keep trading towards it. Because I know, based on the research and what I shared in Trader Lab and the other traders who we collectively work together, that there's a high probability, which I already shared with you, of getting here and getting to the ETH high. Now, it doesn't have to because there's no 100% statistic. But until this breaks, in other words, the whole thing falls apart, and we take out the low, I'm going to be taking longs only, going for this and going for this. If you knew that, would that provide some guidance for you on not to be taking shorts, and this might be the high of the planet, and we never come back here in our lifetimes, or would you only be taking longs if you understood market mechanics, had a structured, vetted trade plan that has a statistical edge, and you knew these statistics were in play? How would that influence you as a trader? And might that be helpful? That's what Trader Lab is. That's what it's built on. And it's open to all of you, and there is no cost. And that link is in the bottom of YouTube. If you have questions, post them. I'm going to come up for air because I need oxygen. And please hit a like. Alexander, the VPAC is not support for a long. It is a retail price. If you're talking about mean reversion, yes, this is the retail price. Now let's talk shopping. Shopping. Remember, what is trading? Shopping. I know. We all think it's something else. It's just shopping. It's what's difficult about it is the random rotations and the uncertainty. It's only shopping. And the market's job is to try to figure out what's too high and what's too low and what's fair. And it does it in all fractals and time frames. So when we're seeing this chop, chop, chop thing, it's actually an auction. And then when you go out to pull the telescope out, this is the retail price. So this is not necessarily support. This is too high. That's why we return to it. If we find out too low, wherever that might be, and it might be out anywhere out here, maybe here. If it's on sale, then we'll mean revert back to this. This is the mean. Now, we don't have to come under here because we already did it. But for me, I would not initiate here. I will initiate outside because the nature of the market, if it's a shopping experience, if everybody's willing to pay this for an S&P, retail, that's why it's retail, it's high volume. But I'm a shopper like you. I want to buy on sale. So where do the buyers get motivated? What's too low? Well, we know out here might be too low. if I come out here and take the stops out under this swing, which is logical, I'm going to be looking to be a buyer, and it's not a trade recommendation, to revert and come back. Because remember, the shoppers, can of tuna is $1 over here. If it goes on sale for 75 cents and I'm pushing my cart through the store, I'm throwing 2 in the cart because it's on sale, because I perceive that as the fair price, and this is mispriced or a sale. If it's mispriced, the buyers who perceive this is the fair retail price are going to buy it, potentially, and we don't know if they do, and then we're going to come here. That's called mean reversion. It's a specific trade plan in the trade plan. So let's accept at the moment the trend is up, maybe, right? We can agree on the trend is up. Then how do I operate in this? Now I have a separate trade plan. I have a trade plan in a trade plan. This trade plan is called mean reversion, outside in rotational trading. So I'm going to trade a rotation. I'm not going to trade here. I'm going to trade out here, and I'm going to come here to scale because it's the fair price. On sale, and we don't know where the location is. That's the randomness of trading. Where is it? I don't know. Maybe this was it. We're never coming back here. Maybe this is the support, and I'm not going to take it out. I can't put my stop there because everybody else has their stop there. So my stop has to be further away, maybe out here. Questions? Dan is asking me, do I ever look at the value area on the profile? I don't, except under certain conditions. No, I don't look at the value area. It is part of a structured trade called the IB failure, which is a mean reversion trade. It's a short, actually, would be like a short back to VPAC, but it's not qualified in this context. Then I would use the developing value area as a target. If I'm inside of a range that was actually had value, different, not in this context, then statistics for value area high and low come into play for targeting. But that's all. I don't think too much about them because I'm very much more about being in the present. So remember, stops are here and outside edges here. So I cannot initiate here. Me. Somebody else? Sure. But I am going for this. So, we'll see what it does. These are the targets. And that's a target. So we have the next trades are either out here, back to here, out the top, or out the top, pull back in this area, not a recommendation, and continuation trade here, and then trail. And we have at 70, let me see if it's still there. Here, 471. I posted this in Trader Lab this morning. Resting liquidity. Now, the fact it's sitting there doesn't mean anything. I mean, it means something because we know it's there, but everybody on the planet knows it's there. And we don't know if it's real or if it's just sitting up there as a lure to get us, I mean, we don't know. So if we clear this, then this is the next target. And for me, what I do is I trade statistics. So I'm trading to this, to this. If I have another structured trade, it'd be looking for a long to this, assuming I don't take this out before I come back, and then manage a runner to this. And I have doesn't matter to me what, happens. And the reason I have to say it doesn't matter because why would it matter? Do I have control? No. So how can it matter to me? What matters to me is that I follow my trade plan, because in the end, it's not any one situation. It's thousands of trades over a career. I've been trading going on 45 years. Trust me, there's a lot of trades under the belt. Good ones, bad ones, and things I should have never done, and all the usual stuff. And over time, you try to eliminate behavior and not take trades that don't have an edge, no matter how good they look in hindsight. If you are going back and using your indicators and tuning and tweaking, like you look at yesterday and you go, wow, I want to get that next time, and you apply that to this, you're going to be demolished because today is not yesterday or last week or whatever. It's all unique. So the idea of the Trader Lab is to help traders navigate real-time, continually changing behavior in a random environment. That is what this is all about. Not trying to curve fit your indicators so next time, because otherwise the casinos would curve fit their games so there's no losing hands. It doesn't work that way, does it? So if we put aside this need to be right, which is driven by fight and flight, FOMO, and the lunatic, that emotional state, I call it Hyde, Jekyll and Hyde. If we can put aside that need to be right, to get approval, to quote, make money, to think that this business is just indicators, time frames, and an ATM in the basement, let's just please put that aside. Because that's what typical retail traders think, believe, and that's their behavior, and their outcome is abysmal. And that's the reason why, in my opinion, I've seen it. Too many traders over too many years who had potential, who failed in this business because of their beliefs. And the problem we face now, and I always like to mention this, and it's a problem I faced, was everything works sometimes. So you think it's just a matter of improving it. Isn't that logical? Well, this business is not logical. It is counterintuitive, because of what works in the outside world does not work here. We bring our beliefs from the outside to trading, and then we try to wrap trading around what we believe to be true. And because it's true intermittently, then we think we're on the right track. I call it Trader Groundhog Day, and I did a webinar on it. You should take a look for that one. If you're interested in Trader Lab, by the way, you're all welcome. There's no cost. And as long as it's still no cost, you might want to make a beeline. Use the link in the bottom of YouTube if you're interested in Trader Lab. It's a community of like-minded traders that have come together. And I'll tell you, it is a serious environment. It's not romper room. And you can see what's going on in here. There's a lot of interaction. Joe's talking about some research. Good job, Joe. Sell triggers. What's the potential? If we came out the low, there's a potential for a long. We didn't yet. Maybe not. Remember, if you don't have a structured vetted trade, wait. I have to remind everybody not to get carried away. It's easy. Here's where I took a trade. LVN, what time was that? 9:30. So I took that long and for a potential mean reversion, and I took a stop. I put it back on and the mid got scaled, and somebody else took it, and then back in the mean reversion trade, and I think I got a scale and I got taken out of it. And then I'm targeting the IB high, overnight high, and the liquidity at 70. Just what I'm saying to you now, nothing's changed. And that was at 9:42 a.m. Central Time. This is how far in advance I'm working statistics and a trade plan for that, and 70. I hope this might resonate with you. And it's not that the trades do or do not work. They're all random. It's the overall understanding of market mechanics and trying to get in alignment with the statistics and the behavior of the participants, and we don't know. The other part of this is, of course, is this the high of the day? Well, maybe, right? But what else do we know? This is the retail price. What else do we know? If we come back here, we can take this and go there, or, remember the or not, and come down here and then rotate back here. So what are my structured trades? Outside in, here, and 70. 9:30 this morning. And it's now 11:30, 2 hours ago, my time. That was the trade. Same trade. What do you think of that? Is that interesting to you if you're visiting Trader Lab today? Can that give you an edge, and can that help you? What do you think? please give a thumb up and post a comment. I'm interested in your thoughts, always. Because what I try to do, this is advanced trading. Now, what I'm sharing in the stream is more of the development side of this. You can dive much deeper. But even at this level, this is very different than what most other traders are doing or attempting to do. TraderLab is an advanced environment. You don't have to be advanced yourself, but you need to know you're coming to an advanced process that will differentiate you potentially from other retail traders and their typical outcomes. So it's almost like an advanced degree in trading, but you have to put the time in. There is no shortcut. If there was a shortcut, we'd all make a beeline. I know I would have, and you would do too. And we're all kind of taken in by the only thing you need and the magic indicator and all this nonsense. I'm a little against that because many retail traders run out of time and run out of dollars before they ever find the reality of what this business is. Because now anybody on the internet can be a, quote, Instagram, whatever, guru, and have a chat room and all that jazz. Well, I happen to be, one of the things that motivated me to do this is because when I became aware of what was going on, and I'm a full-time trader, what was going on out in the internet, with all this nonsense, it disturbed the heck out of me because most traders don't have a shot if they go that way. Now, that doesn't mean if you do what I do or what's taught in TraderLab and shared with the other participants and what they bring, that this will work for you. There is no such thing. If you want to become a highly skilled practitioner in any endeavor, you're going to have to roll your sleeves up and do a lot of work, a lot of education, and a lot of blood, sweat, and tears. This is the real world. I'm not sugarcoating it for you because I can't, because that would be nonsense. This is going to be the toughest thing you ever do. And what's tough about it is not that you can't learn it, because I believe I can teach anybody to trade if they do the work and they actually follow a process. Most individuals are managed by their emotional states, their fear and their greed and their FOMO. And no matter what advice I give in TraderLab, many retail traders will waste a lot of time thinking they're the exception. The reality of this business is there are no exceptions when it comes to us, because our primal wiring is the same. But FOMO, which means not following a structured process of education, FOMO is the belief that you can do it differently when so many others have failed doing it that way, but we believe somehow we can do it differently. The belief is on top of FOMO because we rationalize behavior that is not in our best interest. It's almost like saying, well, I've had too much to drink, but I know I can drive okay. Why? You're under the influence of chemicals, whether it's alcohol or whether it's dopamine or cortisol or all this. There's, hormones and all this stuff that's released. I hope that makes sense, and I hope I'm not offending anybody. But when you're doing this 45 years, you've got to see a lot of things, not only in my own experience, but for all the traders I've seen who've tried to make a career out of this and have failed. And they should not have failed, but they could not learn to control themselves and understand they have to build a platform or a business model so they can replicate what it takes to create a statistical edge. The casinos don't make games up. The casinos also pay the gamblers and the rest, yet they have a very profitable business. If they're not making games up and they're not operating randomly in the way they approach their business, can we emulate a successful business model? That's what the TraderLab's built on. And if you want to be in the business of trading, I invite you to TraderLab while it's still no cost. And you can access that there's a link in the bottom of YouTube, and you can come to TraderLab. And also there's a lot of additional education in the Bookmap Discord server. Large cap, small cap stocks, options, crypto, order flow with a high tier tool like Bookmap. What do you do with this? Now, if I don't use indicators, what am I doing? Well, there are days I ask myself what I'm doing, but I'm following a plan. And there are days when the market and the plan are not in alignment, and that's the day where I don't have a good outcome. I've gotten past the point of trying to get it back. I go, well, tomorrow is a new day, and maybe the market and my plan will be in alignment. There's times they're not. There's other times where, I take stops every day. If you want to avoid taking stops, then you should go in a different business. That's all. Because stops are overhead and cost of production. Seems the casinos are okay with that. They pay the gamblers. And the cocktails and the tickets to the buffet and the rest of it, right? And maybe they'll send you to see Adele. So they can do that. Why? Because they're not making it up. They're just playing anchored inputs or structured games. And it's the same in Trader Lab. Structured trades. A structured trade is a structured game, if you want to approach it that way. That means it has statistics that are tangible. When you have something tangible, you can better manage your emotional state. Because when you open your trade plan, and this is what we do in the Trader Lab, you know where your trades are. You know if they have a probability of getting to their target. You know what the probability is of getting risk neutral before taking a full stop. And yes, you will take full stops. And yes, you will get risk neutral. And yes, you will scratch the trade, because that's the goal of getting risk neutral. And yes, the trade will go on to the targets. And yes, you'll get taken out on counter rotations with trade management. That's trading. Sorry if that's not what you think it is, but that is what it is. And it's not one trade or two, it's thousands. Just like in the casino. It's not the last hand, it's not the next one, it's all. That's it. So now you know what trading is. And if you're interested in that, visit Traderland. I think you'll find it maybe one of the best environments you'll ever be in. Ever. In this business. Now, I might be a little biased, but when you've been in the business like I have, 45 years, you kind of know what's available and what's out there. And you also know that what most trader education is not worth the dynamite it takes to blow it up, even though everybody has winning trades. It must be organized into a structure that creates consistency, not be a gunslinger and a video game player. And that's fine, but that's not Trader Lab. So if that's your goal, then Trader Lab won't be for you. Remember the statistics. And we have another trade, don't forget to. We have a couple things going on. We got this, and then 70, and then it's what we call the Hail Mary pass. That's American football, where they just throw the ball into the end zone and hope for the best. That's what this is, because there's no structure up here. But we could rock substantially higher. And there is, I'm going to give you another statistic. Well, it's not very high. About a 38% probability, the first hour's range, that we get 1.5 times the first hour's range. Now, that is like pulling a number out of, let me use the term left field, but it's a statistic. But it's only 38% probability we go between IB high, IB low, this range, plus 50% of the range. So let's just say 5,900, that's 40, that would be 20 points higher from here. So it would be around 5,980, and 70's out there. So there's a 38% probability we get to 80, and 70's the obstacle. Not a trade recommendation. Remember, the statistics that have the highest probability are here, here, and there. What do you think of that? Is that interesting? How about it, YouTube? What do you think of that? Is this something that would help you? Please give a like if you're visiting. Subscribe to the channel also, because you won't necessarily know that there's new streams that are out unless you subscribe, so you get a notification, and you'll get notifications for other very interesting streams. The streamers that we have in the Bookmap education are really, as they say, top shelf. Sometimes I need a cocktail after this, or top drawer. And They're really excellent, and there's different methodologies, aside from what I do, and specific education on order flow. Since I don't use indicators, what am I doing? I'm looking at the participant behavior. If I can read this, does that give me an edge over traders that are waiting for some backwards looking math-based indicator to tell them what to do? Google Translate. Does an indicator tell me I should be fading this? Or does my understanding, which is the primary thing, tell me that I should only be long? Same as 9:30 this morning. Only longs, unless I'm a counter trend trader. Right? And that was wherever it was, 9:30. I can't remember, but I'm just telling you, that's my trade plan. Thanks, Joe. Good research, by the way. By the way, there's a lot of research being done here too in the Trader Lab. There's more. There's more to be done. We're never going to be done. We're never going to look for the nuance and the things there's all kinds of tools being developed in the Trader Lab for Trader Lab participants, not out in the public space. There's a lot going on. I don't remember where it was. 9:30? Don't know. This is the higher time frame. I post this in the Trader Lab. Lots of times I'll do circles, arrows. I didn't have time today. Yeah, 9:23. First hour high, mean reversion. It's longs. IB high, overnight high, and then 59.70. There's your IB high. Overnight volume point of control, remember? Now we can see profit taking right here. We're looking right here. We saw absorption. This is absorption. Let's watch for the rotation. Not a trade recommendation. We have another statistic open above. And then, of course, the Hail Mary pass to 70. You guys with me? Is this making sense? Let me know you're getting something from this. Gives me encouragement to continue doing this. I cannot trade when I'm streaming, so it actually is kind of an expensive thing for me. I manage my trades when I stream, if I have them on, but I do not initiate because I can't be doing this and this is a separate computer for streaming too, so I'm not even, my workstation is sitting elsewhere, not far away. But I do not put trades on. Been there, done that, not so good. It's not smart. It's almost like checking email and anything else, taking phone calls while you're trading. You do not want to disengage. It's like being on the court in the NBA or being in the operating theater. You're not going to be checking your email while you got doing open heart surgery. Right? It's all the same. Anyway, so this is next. So let's watch here for a potential trade. I don't call trades, so let's watch. Sellers were here, buyers are here, Microstructure is here, VHVN, watch. These were resistance, remember, coming down. You get above them. That's why this is our statistic. Remember, first hour's hot had, where is it? A 68% probability, and you got to vet these for yourself. Past performance not indicative of future results. A 93% probability of taking out either the ETH high or low. I don't know about you. I'm leaning with the high. And then, what else? I don't really have anything. And then the 38% probability of accelerating, and I think it was 20 points over this, which would put us around, what was our IB range, guys? 40 points. What is this? Let me come back to this. IB high, where's IB low? Wasn't it losing my mind here? Yeah, okay. So call it 5,900 to 5,940. So that gives us 20 points, which will give us 10. Is that right? 20 points. I mean, brain is dead at this point. You got to forgive me. So 1.5 times this. So we got a 40-point range here. That would add 20 on top of this. That takes us to about 60. And then we got 70 here. So that's our ballpark, okay? So this is the next target. So for me, it's longs only. I have a continuation trade structure setting up here called the IB continuation trade to observe, not a trade recommendation. Market can rotate. There's exhaustion right there. This is order flow. I have my buyers here. So we'll watch, okay? Structure is out here. Let's just watch. Not a trade recommendation. We still have the ETH high stat open. And this is a stat also. Remember this here. So this is a stat. So if you're long, you'd be targeting this. And then you'd be holding a runner, or you'd be out subject to the number of contracts. For me, here's the possibilities. I can just pull out a bit and come back and go up, or come all the way back here and mean revert. I don't know what it'll do. So I don't have, clairvoyance. Not gifted with that. Still working on it. Support. And then we can come outside. So we just have to watch here for triggers. Not a trade recommendation, guys. So support, microstructure, right there. Buyers are here, buyers are here, buyers were there. Potential long here to there. Resistance is there. Not a trade recommendation. We're just watching, okay? Together. You have to craft your own trade plan. My trade plan is different than yours. Some traders are going to take a long here, and that's resistance. Other traders are not going to mess with this, and they're going to want to get further outside, so there's more range. For me, I'm not a one of these, it's just not my trade. For me, I want the range because I can't enter here. If I enter, I'm entering here, and this is where my scale has to be. So this is like using, and it's not that you can't, I'm just saying I just have a preference for larger rotations. But let's watch this and see what it does. Because here's the structure. Here's the structure. Here's the structure. Break high, microstructure trigger right here. Break high, come back here, target. So if you could trade in this, yeah, you could do this. To me, that's too tight. That's not enough range. My trades, and it doesn't matter to me because my job is risk management first. There's thousands of trades. Our FOMO says, I got to get it, I got to get it, I got to get it. Is that what you feel? So do I. But I've learned through pain and cost that this is not an edge. This is just, the edge is everything can be here, and it is, except range. So for me, I can have everything I need for my next target, but if I'm initiating a trade and my obstacle is here, I can't enter. I'm not going to enter here. I'm going to have to wait to see the absorption here and then see the trigger. Now I have a trigger, and my support is here, here, and in here. So if where am I getting long? Here to there? Problem. So I can't do it. I'm just telling you the rationale behind. I would not take this, even though now if I had the exact same thing, but the location was further out, so I have the range, that it's qualified and I take this trade. But this trade doesn't see the range. Because remember, the market's fractal. Market doesn't care what we need. Not interested in us. So if I'm just putting this trade on because of FOMO, I'm on my way, I'm walking out the door. it hasn't hit me in the butt yet. I'm on my way out of the business. Staying in the business is the discipline to just wait for your trades. That might sound really difficult because of our compulsion, our FOMO, and it is. You come to Trader Lab, you can build the tools to help you understand what does it cost you for this behavior, no matter the outcome of the trade. I created something, and I don't remember when it was. 2010, I don't remember. Early 2000s, called the error cost calculator. And because you know how it is, even if you journal, you make an error, you put it in your journal, you turn the page, off you go. Out of sight, out of mind. And I saw that, I would impulse in, I would bail out of a trade. I do all the stuff we all do because that's human nature. I decided I would put a dollar amount on it and keep track. And I labeled them, just like you might label setups, so you could kind of see what goes on. I labeled errors and I quantified them. Imagine throwing $20,000 out the window over a month. What does that do for you? Well, besides make you nauseous, what I did is I wrote a check out and I pasted it to my monitor. And also when I started my computer, on my desktop would be a photo of that thing. So that's how I started my day. I wanted not to forget, because in the moment we become myopic, we're here right now. We're not thinking about anything. And the lunatic who's under the surface, Hyde, is always there. Always talking to you. The voice in your head. You know who that is? Meet Hyde. That's when it says, I'm going to get stopped out. I'm not going to let it come back. I'm going to, Meanwhile, the trade hasn't failed. This trade hasn't failed. Until it does, it hasn't. But Hyde sees whatever, this, and bails out. Or I'm going to move my stop to break even. You get taken out here. Meanwhile, the trade goes up to 70, maybe, or not. You see what I'm saying? This is what the Trader Lab is about. It's to help traders understand the obstacles and the self-imposed obstacles, and also how to construct a business that might be sustainable and create a career path. If you're interested in that, that's what Trader Lab is. There's a link on the bottom of YouTube. There's no cost for it. And I would suggest, while that exists, that might be a good idea. This is also part of the 60 PDFs that are available for traders to download. And these are trades, structured trades. I'm not a vendor, so there's not a course. Some of this was research oriented. I was working with developers at Bookmap on ideas to help retail traders. Some of this stuff, I don't use any of it, but there were things I saw that I said, can we build something that will help traders? Because most traders who come into this business are indicator oriented. They don't understand any of this other stuff, how the market works or order flow. So I was trying to help them. So these are actual trades and other, things that were being researched. And anyway, they're all available. There's no cost. They're available in Trader Lab, as well as the statistics I quote every day and a library of webinars that are all available to you, and there's no cost. So that's an open invitation. And let's see how our market's doing while we're still here. Is it going up? Where's it going? Well, remember where we're trying to go. By the way, this stream is available exclusively to Bookmap Discord Trader Lab participants to reverse engineer. Screenshot, circle arrow, make it part of your plan and part of your research. This is what you need to be doing. Replays, interaction with other traders, collaboration, and be in a serious environment. If they're interested in that, visit the Trader Lab. Look forward to meeting you there. Have a great day, everybody. Remember what our targets are, and these aren't trade recommendations. Here, 70 is resting liquidity. Once you get up in here, you're kind of out in space. If we exceed the overnight high, there's that resting liquidity, and that was posted in Trader Lab at 9:20 or so this morning. Nothing has changed. Have a good one, guys. Thanks again for visiting Trader Lab. Please give a thumb up and a like. Helps the stream. And I look forward to meeting you in the Trader Lab. Thanks. And I'll see you guys tomorrow.